Greetings, market rebels. Welcome to this week's sector situation video. It's Sunday, July 16th, 2023, a little in front of noon here on the East Coast. I'm Wayne, my partner Ryan's wrapping up the market outlook overview type stuff. We'll be going out later today, and we are going to cover the sectors. And as is always the case, we've got to flash that trusty disclaimer of ours. And of course, we have to flash the trusty intellectual property rights notice of ours. Then I'm going to leave up the planned program, which I just call the stream because I have a lot of thoughts and just try to get a lot of them down. There's just too much to cover. It could go on for many hours because of how really dynamic, right, the markets are and all these different factors that you could take a look at, cite. So we tried to do what we can, but this is really for the macro measure video. If you don't watch that one, at least you'll have a hint as to some of the things we discussed, that some of them might matter to you. They're not written in any particular way. You can just see there's a little bit of a flow to it, but yep, you can keep your eye on some of that stuff if it matters to you. And I think with that, we can stop the share and then reposition things. Just bear with me briefly. And let's see if it always gives a little hiccup there for some reason. So I'm going to come back. We're going to share a different screen and snooze that. And then screen 4 should do the trick. So this is where we often start looking at our grid of 12, right? The 12 spider sector ETFs. You could use other ones. You know, these are just, it's just a good starting point. And the good thing about this is we've got little RSI labels, so we can see, you know, on a daily basis what's overbought, what's oversold, you know, what's middling, that kind of stuff. And we also kind of have that picture of, well, how are these all acting versus others? And I think it's not meant to be educational in that sense in a basic way, but I think what you can see when you do this consistently is, right, what is starting to perform or possibly underperform, and what has not ran yet, what could thus still run, those kind of things. It's very, I think, helpful. That I have other versions of this that I use for other things, but overall, I find this very helpful to have me lead me to make better sense of the market, right? Where I get a sense of what's going on. If you said, hey, you know, I'm going to load up on XLV healthcare. Well, that really hasn't been a great decision, right, over the last few months, because you were left behind by sectors that were displaying real strength and breaking out, like technology, like communications, right? So if you're new to all this stuff, I find it very helpful, and you'll get a knack for it, like anything, after you do it for a while, and you start to see certain things emerge. And one thing that's emerged lately has been that sectors that were not really participating, some that I consider critical sectors like energy, financials, and transports, they all started to perk up. And fortunately, I think we were able to note that and say, hey, it's starting to get a little more constructive on those charts. They may be bear watching. They look good for a change, right? And they may start playing a little catch up to the fun times, to the rally that we've seen in the consumer discretionary, we've seen in the aforementioned tech, communications, and industrials, right? So this is just some of the stuff that we try to hit on. As with macro measure, this could go on for hours because there's so much going on in the markets, but we can't talk about every little aspect. So what we try to do is highlight a few things that maybe could be helpful, little things we can draw out of them on a weekly basis. And I think one thing that we haven't talked about before, as sort of a maybe like a guidepost that you could look for at times, is when you know that the market in major indices are acting very well, and you know that there's lagging sectors, you can start to say, well, what could I spot in there? Is there anything constructive happening? And what I want to point out is we recently talked about energy putting in a slightly higher lows. And eventually, right, those slightly higher, a series of slightly higher lows, this one here, then this one with respect to the lows back here, this one with respect to that low, double bottom, slightly higher low, whatever you want to call it. and then working up to resistance had the chance to break out and put a little something together. There could be more to this. We don't know yet, but I think we were kind of getting ready for that. We were doing the same thing with the slightly higher low in the XLF, right? That was finally putting something together a few weeks ago and turning. And so knowing, right, that it's lagging and that it's getting closer to resistance, it presents an opportunity, to us, right? Especially when we see UOA and the market continues to run, and then a lot of the stocks in the sector start to flash better chart complexions, right? So this is a lot of what I like to do. It's something I just got myself into a long time ago. I've always found it very helpful. When the first time I started doing this, I don't know, somewhere in the 90s, I was like, wow, why wasn't I doing this before when I first got started? But that's how important it is to me. So I just wanted to mention things like that I learned along the way. And right, so what we're trying to do and we articulated this on Cocktail Hour, Ryan did this, and Bill Johnson reminds people of this all the time. I'm really one of those people that probably people get tired of hearing of or from, because I'm always preaching a lot of real things that I find to be really critical in terms of trading and evaluating the markets and so on that have helped me. It's all it really just comes from helping me. And I was once a guy who was very ambitious about trying to buy this low and then sell this high. And I just had this goal, and I said, I was taught as a kid from parents, born during the Depression, you got to work hard. This was conveyed to me from an early age. So I took my own sort of proclivities and the ways I think about things, and said, I'm going to figure this out. Right? I was determined to figure out how to buy this low and sell that high, as an example. And I spent way too much time going down that path, that rabbit hole. And a friend of mine that I was a partner in my trading firm along with me at the time said, Wayne, I really got to, something like, I really have to commend you. His name was Charlie. And he's a very nice guy, a really smart guy, great options trader. He said, I got to commend you. He's like, you're trading here all day, and then you're still putting in all these hours at night and on the weekends. He said, but maybe what you're going for is not what you need to be going for. Maybe something like that, according, kind of like according to memory. I don't have it memorized, of course, but he said something like, maybe you should just go for something that's more practical. Maybe you should just take a more practical approach. You don't need to buy the low. You don't need to sell the high. You just need to be somewhere close. And I thought about it. I'm like, boy, that was a big duh for me, where I was like, duh, that should have been obvious, but my own personality just isn't crafted that way, and so I really don't start thinking in those terms, which I should have. And so I'm always grateful to Charlie for pointing that out to me, because it shifted my focus and it became such a dramatic change for me. Everything went from being super frustrating to very, very constructive, and positive. And it was all just that shift of my viewpoint, my outlook on what I was trying to do. And Ryan mentioned, right, we're not trying to do that. Ryan mentioned it on a Cocktail Hour. Bill does all the time. We're trying to capture the middle 80%. Even the middle 2/3 of the kind of move like you've seen. It doesn't matter, right? If you get those things consistently, you don't have to be the guy or gal that sells the high or buys the low. And so that sounds like a really stupid thing to set out to do in some ways, but I was just convinced, and I still am convinced, that some people are pretty close to that, because they've been able to bring a lot to bear. But I decided, what, my goals were a little more modest, and I need to use more practical tools from the technical analysis toolkit to achieve my goals, which really shouldn't be to buy the high and the low. It should be to be a consistently very profitable trader in whatever form of trading I'm doing. So like I said, I'm always grateful to Charlie for pointing out what should have been the obvious to me in a nice way too. So anyway, that's what I'm getting at, right? We don't have to do that. We don't have to catch this, but there are some things that just look good. I do think in macro measure, I mentioned that, hey, there could be a little pullback. Things are getting a little toasty, but I still think there's a lot more upside potential in this market potentially. Again, I'm not a big pound the table type forecaster. The only thing I came close to with that recently was Snap. When we saw, I think the chart looks incredible. We saw UOA stock was like near 10, something like that. And then we saw more UOA and the stock had been starting moving up. And I just thought that looked amazing to me. But I don't really pound the table on that often. I'm more about saying, what's the most likely scenario? And if the market is supportive of that scenario, and the stock or ETF starts to behave well inside of that scenario I envision, inside of the current market price action, then I'm going to get myself involved in that smartly. Now, that's my general idea of me approaching things. So having said that, right, I do think you could have a little bit of a pullback, but remember, we are in the sweet spot. The final kind of twilight of the sweet spot that really runs from the fall of the second year of the presidential election cycle through July, basically, right? Roughly speaking. You can probably quibble over this, that, or the other thing. But the point is, like, this is typically, and July's have been very good over the course of time, right? Because there's a lot of good reports to come out about the second quarter. It all kind of makes sense. And there's room on the charts, in my opinion. So what I would say is, right, there's other things that could start joining this party. I am not interested so much, not that I would not take trades in it. It's just that I don't feel like I'm catching the early innings in XLY, the discretionaries. I feel like I'm catching the latter innings, right? I think if I were to get myself involved in an XLV, and why I would even mention that now is because, look, we've seen this higher low, then join the party move out of other lagging sectors right above here. XLRE, the real estate sector, higher low, run up to resistance near here, and join the party in a big way. There's another one, right, that did it. You've got that happening in, as I said, that started happening a little bit where you can get trades in. Again, I'm not calling this massive macro turn, but I do think a lot of sectors are getting better, even though I think the breadth is a little bit toasty right now. So it's a little bit of a dicey combination where, yes, there's good things happening, but is the timing right now ideal? And I don't think it is, but again, earnings can just override that normal market action where you do see the oscillators, I think, tend to work better when things get late in a run. And there are news drivers like EPS reactions. You certainly could see them overdo this and really goose things, which we talked about in macro measure. But here's another higher low in financials, goose through resistance, join the party. So just keep your eyes. I think it's a good time to keep your eyes on the XLV. This has materials really saw a little bit of a pickup in UOA. So this could start to break out a little bit, right? If this party keeps going in the market, I would also keep my eye on that one. You can see that you're not too far, right, from the highest highs in a year. You've been consolidating. So that's another one, I think, that you definitely should keep your eyes on, because it could start to fight its way back up towards highs. Now, I should clarify, right? You got a nice double bottom there. They're working this towards the nearby resistance. They could start elevating this to other levels, is the point. But what I'm getting at here is not that you should buy XLB. I really, in a lot of cases, I would say, like, sometimes we trade ETFs and sometimes there's great opportunities in them. But if you can find names within the sector that you like, that seem like they have solid technical complexions, and then the sector is performing in a market that keeps performing, that's my most favored phase, right? Bull market activity, not saying bull market activity, bull market action, sector participating, and then best stocks, the best charts start to work. That's my cream of the crop. I mean, that's if I'm not trading UOA and I'm just trading momentum, that's the kind of stuff that I like. And so I like to go with the strong ones and then switch to the laggards when the strong ones have had their run, because that's what the market does, not because I'm some wizard that figured out anything unique there. It's just, that's how the market operates. So I think the more we can position ourselves to stay in harmony with how the market works and what these these wizards typically do, the better off we'll be, right? And even XLK, right? Look at that. I mean, that even put in, right, the higher lows, and you hadn't broken out yet, but that to me is often your, for XLC, that's often your first sign that, hey, there's a little bit of constructive stuff happening here. Right there, it's exactly what I'm talking about. They put the higher low in here, they versus the lowest lows there in November that we see at this point, work it up to resistance. Now, the trade up to resistance is in and of itself a trade. So from the launch from here to there is big, but then getting the breakout trades even better, right? Sort of. So these are things I would look for. I think you should keep your eye on XLV. I do think you should keep your eye on the XLB if this rally continues, okay? If the rally continues. So I think that higher low stuff, that is some of the stuff that I would convey to you in terms of something to keep an eye on in your charting journey. Here is the SMH. I know my charts look, this is like, I know it sounds ridiculous. It's one of my least busy charts, which is why I use this one. I'm just one of those people that likes to look at a lot of things. It's how I feel comfortable. But this is a new high in the semiconductors. This has been, right, the real catalyst for much of what we saw. And you've got this kind of really amazing kind of inverted compound head and shoulders with many shoulders and a clear kind of pointy inverted head. And you're right at, right, former resistance, but you did actually make a new all-time high. And so this is where you can see, right, let's get a better view of it. This is where you can see that sort of potential for the throw over that people will call it, right? Or what I would just kind of call that melty, squeezy thing. If they get this thing going, you could easily see this thing tick up. You know, I think from where it is now, I would put it at another probably 6-7% before you're at your upper Bollinger. And that's like another line that I've got up there that I'm working with from way back. So this to me, right, if they goose through there on earnings or whatever, this has some real potential. That also, right, is going to really frustrate the living daylights out of people that have been trading thinking I'm going to hold on to my positions. They're going to do the alternative sleeper scenario, which is take out all-time highs on this climactic buying frenzy, short covering frenzy, and then maybe pull the rug if some of the macroeconomic data isn't misleading. So, and valuations haven't gotten too stretched. But again, I would not look to fight against it. I'm just saying there could be a future trade there if that scenario plays out. But remember too, that busted patterns are some of the best trades you can find. So if they do kind of fire this inverted compound head, multi-compound, I guess, head and shoulders, you could see that goosing, the squeezing, the short covering, and the rug pull, right? Because then you get a busted pattern and you really start to roll over. Now, according to the third-year presidential cycle sweet spot and just the cycle itself, we should have a little bit of turbulence here for the next couple of months after July, or roughly speaking. And then things get better in the end of the year. Towards the end of the year, you finish strongly. You begin next year strongly. So, you know, the bulls have the seasonality in their favor now for really almost the next 18 months still, really 17 and a half, but you get the idea. So I'm not turning into this wide-eyed bull. I'm just saying, like, let's keep that in mind. So I do think there's a lot of people that have gone into here. I think there's a lot of people that have gone into everything. And I think there's a massive, massive amount of capital that's gone into these markets already, from what I can tell. And that is the recipe for, if they're right, of course, it's all fun and games. If they're wrong, everybody has to head for the exits to a magnitude that's maybe greater than anything I've ever seen to this point in my career, that stretches for about a little bit over 30 years of doing this stuff. So that's what I would share with you on SMH. Now, getting back to kind of the XLB situation, right? I think we should look at, I'm sorry, I'll bring that up since I mentioned it. XLB. that to me, right, you can see that as well. You can really see that this has been left behind. And I think this goes back to the fact that we've been saying in macro measure, Europe, Asia, well, China mainly, things aren't that great in a lot of other places. And there's not a lot of demand for things as a result. But who knows? Maybe that shifts. That's the thing. Maybe it shifts. But this kind of has a kind of something like an inverted compound head and shoulders as well. And so that could fire. And if it does, you got to think it can make it up again. We're not really looking to, I mean, I would take a $9 run if I bought some slightly in the money calls, and I'd love every minute of it. It's just that, of course, I'd rather trade the specific stock names, right? Not really the XLF, but again, it all depends on where the UOA shows up and what you like. It doesn't mean you have to. We trade the UOA. We don't typically take a stock and just say, hey, they bought sector calls. We're going to then buy, Freeport McMoran. We don't do that. You could, though. You could on your own. We just don't do that because a lot of people would get confused. Like, well, by what are you guys doing here? There's a UOA in the sector, not in Freeport. You get the idea. So let's look at. I wanted to look at, since XLV kind of looked interesting and it's lagged. It's typically defensive, right? But it's been lagging behind. And if they're repricing the whole market higher, the gang may at the very least create a short-term breakout, right? Where it's maybe even a false breakout in the bigger picture. But it's been flatlining, it's consolidating. It's triangulating, right? So there's sort of this stored energy in there. And so that can be turned into kinetic energy, right? So just keep that in mind, because if they keep this frenzy going in stocks, they will eventually come around to some of these sectors that have not run and just said, essentially these represent great values. They haven't ran. I'm going in. So that's looking, this is looking a little better to me. I would not dismiss this. We've been sort of dismissing this overall for, I'd say, quite some time, because it hasn't really been acting well. But I do think, right, that it's maybe on the verge, and we have to credit some of our Rebel Pit folks and the cocktail hour commenters that have asked me to really look at this, and I did, and I have to concur with their take. So there's some opportunities, I think, starting to creep up to where they could emerge soon. So again, this one too, XBI, I don't see this as a great buy yet. I'd rather see it break out. You can see it's been consolidating for some time. This is bigger picture weekly charts. I should be mentioning that. But the bottom line is, right, that this has not really broken out yet, but it does have a higher low as of now. So could it build off of this if it starts to move up? And this is a little bit bigger picture, just giving you the idea. But so this is some of the things that I'm seeing, after looking at some of the lagging sectors that are out there. You could clearly see on the daily now, right? Higher low for now. So if you have this big long run and then you pull back here and you start to go, and the market has, as you've been doing this, the market's been doing this, right? There's a big performance gap. And so you could start to see, if this market rally again wears on, you could start to see them say, hey, this is a sector that just hasn't performed. There's some opportunities in there. They come after them. So keep your eyes on the XLV, XBI, XLB, if you want to look into some laggards that maybe are starting to show us something. Also, interestingly enough, XLK, which a lot of are just, it's the tech sector ETF, but this one, right, much like the SMH, it had a phenomenal run, and you can see it just made a new highest high. I also do think that is a new all-timer, but let's just double check before I get too far on that, because it might not be. Let's find out. And it is, yeah, it is. So I know that this seems a little weird here, but look, that thing didn't close well after making a new high. I do think this got short-term overbought, and I do think it's overbought on the weekly chart already too, right? In the way that I look at things. And it could have just had a false breakout. But remember, with earnings, there, if they go in back, if they are able to kind of back this off a little bit, take the short-term overboughtness out of it, and then go back into goose mode using the earnings to drive it, there's a lot of room. There's a lot of room still in technology. So again, I wouldn't really want to be fighting this aggressively. If you do take counter trend trades, remember, these are strong trends we've seen. Remember that shorts have been eaten alive. I just saw, more reporting on that. It's been one of the strongest short covering phases that has happened in over a decade. And there's just room. Now there's massive stretch from the 200. We showed that in macro measure. You're at some really kind of extraordinary stretch levels. Is that up here? Yes, I'll try to find this for us just because I mentioned it. But there's your current stretch from the 200 day. Now we were even worse a little while ago, but if you look at it, right, this is in the last 5+ years, this is the most stretched you've been from your 200 day, just a few, basically a couple of weeks back, other than the post-COVID hyper madness. So this is extraordinary in what you would probably say are normalized conditions relative, especially to the post-COVID support from the Fed and Mordor on the Potomac. Okay, so that to me is just huge. So that's why you have to appreciate the risk right now, while also saying, right, that there's still potential for this thing to keep running. I don't think you can rule that out. And so what would I do on that? I would just trade it. But again, it goes back to your ability to manage the position inside of the market environment that you're operating in. And I think you dial into the fact that, look, I am not in the bottom of the first. I am somewhere towards the later stages of at least this rally for now. And that all shows up with the sweet spot, the third presidential year, the whole works. It shows up. So is there a ton more upside? I think there actually is. I would not be surprised by another 8 to 10%. I'm not predicting this. I don't want people to think I'm pounding the table. I'm just saying that, look, on the charts, it's there. It's held trend. It just continues to hold trend. They're not letting it go yet. If they want to go into that goose, and I mean, if I'm them and, I want the perfect scenario, I ignore overboughtness in the short term. I use these earnings that hopefully in their minds would be really great earnings reactions. I get things even further goose, and I distribute like hell into the gap ups that are going to occur if their earnings allow for it. I would then sell, right? If you see these stocks launching up, 5-10%, like we've seen at times with some of these moves, that's when I'm liquidating. Or I could just go in there and buy puts right there against my position, whatever the case may be. It doesn't even matter, right? But so I don't really hurt myself so much trying to execute all that stock. I can go in one fell swoop and hedge myself. But the point is, right, that you have the room if they want it. And could there be kind of negative divergence there? Yeah, there could. Could you have a sort of a double topish happening here? Here's your RSI, here's your top. Yeah, you could. There's a lot of stuff going on, right? This is why at times it's just not that easy, right? It's not that easy I think, right, with that kind of a candle, should you have a little bit more of a pullback first before you go again? I would say, yeah, you should, because you did get overbought and you should still be coming in for more than just a few hours. You should be coming in a little bit more, but it doesn't have to happen though. But yeah, that would be my normal thing. But look, earnings could certainly upset any apple cart. So I think believe it or not, right, that is another one worth watching because it's still acting really well. It really still acting very well. And so with all the big names set to report in the next couple of weeks, and the names I'm talking about, the biggest of the big in terms of mega cap tech, what's coming down the pike, right? And there's a good chance that those companies have the best accountants, corporate accountants and tax attorneys in the world, probably, or at least in the United States. And what they're capable of doing. SMH, very similar, right? But remember the stretch, right? So this is, again, the stretch of the 200 is extraordinary in some of these things. Just those are your two biggies that could keep running, I think. No surprise, they've been the ones that have ran. Oops. So XLC, my bad.
not out of the woods. I'll go back to XL8, but here's your XLC, right? More controlled uprising, I guess we could call it. Massive bets in here, has a lot more upside potential, has not ran anywhere close to the all-time high. So again, if they keep this going, that is overbought even on the weekly. And it got probably right on Thursday, it got a little bit towards short-term overbought on your daily. But does it have more room if it wants it? It does. It just does. So that's where we are. That's where we are in that one. This one's interesting, XLE, because we did catch some decent little moves in there. I think in UOA, I'm hoping to get some decent little reports on a couple names we had in the energy space, because it did start to act a little bit better, counter to the long-term trend. Not out of the woods yet, because I think I should make that blue. Hold on, just so everybody can see it. This one to me is, you have the perfect thing where breakout, hit the 200, respects the 200 in purple, comes back to my support line, happens to be right near the 100 in there that's dashed kind of like light gray. This should be the break, pullback, and possibly go. So that means it's, if it does that, right, in the minds of a lot of technicians, it's confirming that it's now left this kind of support structure, resistance structure behind. It's converted that, at least temporarily, to support. It's bouncing off there, and then it has a chance to, remember, this thing's got all kinds of catch-up potential, because if you look at enough data on this one, this thing has been consolidating for, well over a year, right? You've been downtrending lately, but you've been in really a longer term consolidation for a year plus. So this certainly could, if there really is robust economic activity around the corner globally, or even just in the United States, maybe, you could start to see something better. Not predicting it, just sort of stating the obvious there. On that note, let's look at crude. And you can see that crude also has done very well. For those of you that wonder if these SMAs even matter, I think time and time again, if you put them on your charts, you'll see that they do. Does it make any sense? Not to me. Does it make any sense in the fact that, from my experience, I would say it makes a lot of sense, yes. But why something stops at an SMA is just self-fulfilling prophecy, I guess. But it happens a lot. These things respect these SMAs a lot, even though they're the most basic way to calculate a moving average. But right, you want to see, if you're a bull, a nice little mild pullback. You hold above that kind of 70. Oh boy, what would that be? Sort of right where we are. You kind of hold here, and then you start going, take out the 200, and then you start putting this in your sights, and you get through there, and boom, you could really be finally changing trend. Not predicting it, just saying it. If it corrects more below that 100 SMA at 73.43, after becoming short-term overbought, right, that would do more damage. You'd have to see if it could then hold the 50. Maybe the 50 starts rising because the newer data is looking pretty good versus the older data, that kind of thing. But you just give it a chance. Interestingly enough, the wood and cut, right? Some of the lumber ETFs, we can't check the lumber futures anymore, it doesn't seem. Wood and cut, at least the symbols I'm using are not working. Wood and cut also perked up. And if you go to the housing market, right, that part, that still has stayed strong. So they perked up a little bit. Again, to me, this is Wile E. Coyote's doing his stretching right now. He's ready to perform, at some point, maybe later this year. But yeah, I think, again, builders building over a cliff. I don't see how, with the inflated home prices, I say the same damn thing every week. And this is exactly why I don't trade my own takes on things. I just trade the charts. This is it. Higher prices, it's so unaffordable, especially now with mortgage rates where they are set to go higher. You all know the drill, but cycles have to play out. And so you got to give it a chance. But here's something interesting. We do look at copper, kind of get that idea on things. And copper, look, what do we see here? You know, I've talked about it this week more than I talk about any other like little things, but you kind of have this angled inverted head and shoulders that's formed in here. And you've got the higher low. There's our friend, the higher low that we talked about earlier in the video. And it's taking out the last of your SMAs, which is your 150 in rust. Backed off Friday after breaking out, or false breaking out, or whatever you want to call it, in some breakout eyes, right? Not all breakout eyes, because you haven't exceeded this high. But point is, you did break above the 100, got above the 150, came back, you touched the 100. I think it bears watching. I know that we're not trading copper, but again, this goes back to your basic materials, right? The XLB. So if some of these things are starting to perk up, that would be helpful, right? You can see that materials like lumber, all these kinds of things, they're starting to perk up. I think a lot of money was reluctant to head into here because I guess the gang kind of knows that the macro situation isn't stellar, would be my guess, and they decided to chase the high beta names, which paid off like gangbusters for them. But there's a lot of money that's gone in here of late, in my opinion. I think they're positioning themselves in there. So this would be one to keep on your radar again, if this market starts to continues to, I should say, find a way to rally, right? Finds a way to rally. So that could break out, maybe attack the all-time high. You want to look for some names in there, obviously. We did have some Freeport paper. We did have some SLV paper. There's been a little bit of things like that. Nothing extraordinary. You probably want to get through earnings because they're looming. And so before you do anything anyway, if you're positioning, but you can't argue that chart doesn't look better. I mean, in my opinion, it does. It's moved up to where that 43.90 level. And if it can get through there, it's on challenging that 46.73 high. But that 43.90-ish is sort of a good little resistance spot. I don't think it's to the penny. I just got something up there quickly as a visual. I think that's where you're looking at, is just a key area that lets you move up to the next one. The next, potentially, again, in a supportive market, But let's take a look at XAU, because again, I just mentioned silver and so on, and that started to perk up, right? That started to perk up finally. A little bit of a double bottom there. Again, this is why you kind of look for that double bottom, slightly lower low, slightly higher low. I've always found this to be very prolific in terms of how often it appears, and also very much worth. Very similar situation here. Look at that, right? So could you go again? Yeah. I mean, these things, it's just a great pattern. It's a super obvious, great, ubiquitous pattern that you keep your eyes on, in my book. But look, probably had a little bit of too far, too fast. Notoriously difficult sector. But notice the 200 now is upsloping in purple, right? So they've flipped that around finally. So that's not a bad sign. Your shorties are starting to maybe cross over that. I'm not a big crossover player, but just pointing out the obvious. A little bit overdone maybe in the short run. I mean, like intradays, not daily or weekly. So has plenty of room, but maybe just needs to chill out a little bit. SLV I'll look at because it's related to this, and I talked about the UOA that hit in there. We did get an idea in there. I played it really after looking at the charts and being a doubting Thomas in these things for a while, hoping on a personal note that they would crater so I could buy more. I just seemed like the best way for me to win is to buy what I want partially, like I did last summer in different forms, and then expect to buy more lower, or I should say expect/hope to buy more lower, because then it's pretty much a guarantee that it's just going to go higher. But I never got my chance at this point to get even more that I want to hold in gold or silver. That's life, right? Sometimes it happens that way. I'm a very big believer in hedging at the right times, especially, and I feel under hedged, but what are you going to do? Let me think about something real quick. So maybe I could, where am I on that and on this? Oh, geez. Okay. Just bear with me, folks. I'm going to try to bring just something into the mix that's a little bit different here for us. And I just got booted out of the Market Rebellion site because I don't know why exactly. I was on the site on the weekend. I was there Friday night. I was there yesterday, and I'm there this morning, but whatever the case may be, I'll just log back in, see if I can bring this over to us. So let's bring this onto the screen that we're recording on. Let me get SLV. I can't remember off the top of my head what I did with this one. So let's see if we can pull it up. So it looks like we got in on the 12th potentially. Let's mouse over this. What's that day, right? That is the 12th. The trigger was 2230. So, right, this is a really big gap. I'm not a big fan of doing this, but that's such a big gap. But I got an idea in there. Unfortunately, right, you couldn't wait around for the trigger that day. And so it did keep going. There's still this gap fill potential in this one. But this is what I have to do at some times. I have to note, right, because I used to trade this. It was actually like, I'm still scarred to this day from having to trade the XAU when I was just getting started as a market maker, and they put me in a position, and it got to expiration day, and I think I was short 80,000, or I feel like I was short 80,000 gamma, and the stock opened up $1 on me, and that's a colossal situation for someone that's a new market maker, but that's what happened. Anyway, the trigger was 2230, and I said, but some may simply want to be in due to the nature of the space, because I know the space a little bit, right, from way back. Certainly not a metals expert, but just know how it tends to trade at times, and it's a very tough sector to trade. It's been suppressed. It's not easy to trade the sector, period. In my book, you really have to get dialed into so many things, but it is what it is, right? At times it has opportunity. So hopefully some folks got into it with my little hint there that they liked it. They've been waiting for it. Some people wait around for this to perk up and get in. From that closing of 22.15, it moved up to what, 22.96. So that's about an 80-cent run, which is about a 5% run over the next two sessions. And what we did was get into next week's 22.50s. So I don't know where they got to on the high. We could look at that too. But I tried to keep this sort of dollar cheap because I know how this can be tough. So they're going for what we bought them for, unfortunately. So because of the way things played out, you just couldn't really do much with it, right? At this point, you're at break even. But I just didn't want. I usually try to get into when I know certain factors. I try to go in the money more so that you can take some cash out and potentially roll up quickly. But that just was a tough one. It's one of those tough things where even though you're right, you don't get it triggering the ideal way, and then you don't get enough of a pop in the short run to really make any money on it. It's only off 10 cents from the high. If it keeps going, those 50-cent calls could turn out to be worth something. But this was a tough one because I know a lot of people like to trade it. So I like to observe that, and respond to people's requests, right? Hey, I'm really looking at this. If you see any UOA, I'd love to see it. I do try to feather those into our log. I don't do it if I don't think the potential is there naturally. I'm not going to force any idea into the log, but if the potential seems to be there technically and otherwise, I'm willing to accommodate people, because I know a lot of people like to see like an energy trade or a metals trade too. So it's not as if it's uncommon, right? But you just tough one, right? This can show you how you have good ingredients and still it's not that easy to win. And remember, we only have a week left, well, less now on the contract. So
silver needs to deliver, SLV needs to deliver soon, or you just get out right at this point. So we'll see. Unfortunately, SLV got a little bit toasty. Like I said, it's short-term overbought on some of your intraday charts, so you just got to be careful there. Hopefully it'll gap up, and at that point I would liquidate, right? Because this was really, to me, it was about getting in quickly and then keeping your risk down. And then from there, is this it? Yep. And then from there, right, this was really more of a starter kit, what I call a starter kit, where we're looking to be, I'm not going to commit to something that's gapped up this much and can be really deflate just as quickly. That's what I've seen the metals do countless times. But I didn't want to go out to December, right, or even September and spend a lot more money. I was going to say, let's see if we can get a quick little move here, right, catch something decent, maybe then roll up and out with your profits, right? Kind of play that metal speculation for free, but it just hasn't happened. So I just thought I'd share that because there has been some paper. We'll see what happens, right? We'll see what happens from here. But I think that's probably a wrap. I've probably gone a little bit long on both videos this week, but thought there were some cool little things to point out that were a little bit different in each one of them. So I hope something that I've shared with you this week helps you out this week or some week in the future. Thanks again for tuning in to everybody. I'll see you all through all the updates and interactions that we have. And I just would say, as usual, right, it's probably even more of a stay nimble reminder than usual, because things are getting a little bit more tricky with all kinds of factors coming into play and coming to bear that we should keep an eye on. So stay nimble out there, and I'll see everybody at some point during the week in webinars, etc., cocktail hour. Thanks again.